Hey, good afternoon, guys. This one's going to be pretty quick in the grand scheme of things, right? So, I recently did a video on YouTube. I'll stick the link in below. I'll actually put it in one of the corners as well, if possible. Um, but look, in the shorter time frame, right? A lot of people are looking currently at the halving. I think the countdown timer when I looked earlier was about 13 hours. So, I guess obviously it's all eyes on. I know to a lot of people, they don't really understand what it is. They don't really understand what kind of effect this is going to have, if any. Um, and how long any effect could actually take to kind of play itself out, right? So what I want to do is just talk a little bit more about the shorter time frame kind of situation. And I think for me, as I've said for X number of months, it's not so much nothing's changed. It's the price action has I guess kind of limped to where we are right now in the grand scheme of things. We've had 12 ETFs being approved. We've got a Bitcoin price multiplier, and yet we are still dancing around $4,000 under the price we saw in 2021, right? The question marks are all there, okay? Now, what I've talked about to the members, what I've talked about from a musing perspective, is if you look at the current level of the open interest, right? Now this is going back to the 16th, so 3 days back. Talked about, the shorts on the leverage funds rising, pretty flat in terms of the buying at the moment, right? And the open interest kind of dropping. Now, without going into too much detail on the COT perspective, right? This is again kind of question mark in terms of what to expect, what not to expect, what is actually possible, right? Now, I know to a lot of people, if it's not bullish, it's wrong, right? And this is kind of the mentality, the attitude. You know, I keep talking about people like Plan B. These guys are still waiting for 135K since October 2021, right? The issue that we have in terms of the way the price action has moved and the way the price action has done what it's done, right, is it kind of tells you the story. It kind of gives a bit of a clue as to what's happening behind the scenes, what we're likely to see, kind of why, right? Now, I've talked about obviously the drop, the reason for the liquidity, where the sweep type levels are. And one of the things I posted was this particular one, which was the better option of the schematic, right? So I'll come back out to a bigger time frame in a second, but smaller time frame, right? This ultimately is what I was looking for, and this was based on a distribution schematic. Where were we? This was based starting from here, right? Now, what I've done here, this is a very kind of busy chart. I've talked about this being range bound, right? We had a high of the 73,835. We had this low of the 59.2, and everything kind of ever since really has been sat within the range low to the range high, right? So at the moment it's technically a range bound situation, right? We've kind of failed here, we failed here, we failed there, we failed there, right? So this is, kind of sideways market. Now I know a lot of people say, oh, it's reaccumulation and we're off to the moon, right? Where I think we are right now still goes back to what I said 18 months, right? The three options for me, two of them still on the table. The best option's gone, right? The two remaining options are the running flat or ultimately the triple top, right? Both scenarios need to come back for a breather, best willing the world, right? That's there's no questions asked there. That is ultimately, what we see. When we look at the distribution, right, and the reason that the distribution is actually the better form is that if it's a triple top scenario, we are likely to go into a longer drawdown period, bigger picture. Right? If it's actually a corrective distribution, then a lot of the corrective waves have actually happened already, and therefore it's kind of more likely to be faster going to newer highs. Right? Now, when I say newer highs, I am talking 90K plus. If we were to see a price move above 73.8 or 70, let's just say 74 in terms of where the price currently is at the current all-time high, then what you'd actually expect is momentum to build, right? And this is obviously where liquidity gains. This is breakout trades, new orders. This is kind of spoofing orders that get kind of triggered in, as well as any stops from previous shorts, right? So the reason that I'm saying this is where a lot of you guys need to be careful and understand, kind of bigger picture. If you look at what happens after they mark up, when you see the volume kind of tapering off, you kind of see that this, although this one's actually an accumulation pattern, just almost turn this upside down, right? And you'll see a similar momentum inversed, right? Now, this particular pattern, this is what I talked about yesterday. I was looking at this, and although initially my gut instinct was this looked a little bit more like the AR type move, this was probably more the PSY, right? Which is obviously the change of character, and then creating the range bound structure, right? Now, the only question that I have personally is this ST slash second ST, whether it's the UT, right? Whether this was actually the ST, right? So there's a couple of different things around this. However, it's still pretty much the same big picture, right? You want to be looking at this for the confirmation rather than an entry. Now, what I was talking about yesterday was if we were thinking purely on the halving, what the larger operators are kind of playing with, and again, there's a lot of confusion for people who don't understand the difference between BlackRock being a big player as an asset manager and the leverage funds being big players but trading leverage, right? If we look at where we are, retail sentiment, the halving, right? Everybody's wanting up, right? And like I said, right, you're wrong if you're saying down. It is the sentiment across the board, right? And it's been like this for years. This isn't just a new thing. If anyone talks anything kind of Bitcoin goes down, they're wrong, right? And I guess for me, it's kind of sad when you know the prices go up and down, and the reason that they're actually healthy to have decent levels of pullbacks for the market, right? Now, if we look at what we talked about with this sign of weakness, the SOW, right? I'm anticipating a little move up, right? And the reason that the move up is we are, 12, 13 hours away in terms of the halving, the block that actually brings in the halving. Um, we've actually got leverage funds net short, right? The blue is the short, the orange is the long. Now, to a lot of people, this is big boys getting wrecked. My question is always going to be the same. My question to you is, who's selling to the retail that are buying at premium, right? And the answer is in this chart. So we got retail sentiment long. We've got larger players technically short. We've had the CEO of one of the ETF providers turn around and say 90% of the current sales in the ETF are actually retail traders. For me, I look back at the kind of asset management class, and from an asset management perspective, IFAs, right, which is the independent financial advisors, these guys now have access to give their clients exposure to Bitcoin, right? Which doesn't necessarily mean it's large, multinational, multi-billion dollar institutional players that are currently filling up the ETFs, right? We've got the ETF multiplier with 12 ETFs, sorry, the Bitcoin price multiplier with 12 ETFs um, being approved. And like I said, we're still dancing around kind of $4,000 under the 2021 all-time high, right? So grand scheme of things, there's still a big question mark in terms of what will this halving do? What will the halving bring? How long of a time frame before a reaction, whether it's a knee-jerk reaction or an actual visual reaction, right? Now, if I come back to what I've just talked about here, the reason that I think we go kind of up to come down is that with the current retail sentiment and the leverage funds there, we want to be attracting newfound liquidity, right? So as you can see from the image, this was obviously first peak right here. I think we would have come down into the range, right? I think we actually touched the range. There we go. And then ultimately kind of up and off, right? So at this point in time, I currently feel, this is what we are, right? I think the stochastic is already in that overbought situation, which means potentially this can be pulled down a little bit, right? I think we might get a bit of a pop before any dart down, and then I think it's back over to retail to buy the dip, and I would like to see 68 upwards in terms of the current move. Now, back to what I said earlier, the only one, I guess, kind of apprehension that I have on this particular kind of dance and this particular move is that I might be slightly off in terms of the situation, whether we've had the ST early, whether or not this was actually the first ST, and whether we actually get a schematic 2, which means we don't necessarily mean we need a UT, UTAD type play, right? So for me, until we get some kind of clear sign that we are either rejecting from the center, right? Now, anything there on a bearish term would mean a break of this prior low, right? So this is, what are we there? This was the 59.5, right? I think for me, this here, 59.2, is a more sensible kind of option if we break below that in terms of some, short in the event. Whereas I think a lot of people have kind of bought into the news. And then I think realistically, I don't see any kind of upside option early doors, right? I think we still need the bigger pullback. So if we do come up here again, then I think the option is to either sit on your hands and wait for that to actually confirm one way or the other. And a confirmation to the upside would actually be, a very impulsive break, probably hitting, 85, 86K, and then ultimately back in to test this range, which is 73 ish, right? And then I think at that particular point, go long would be the call. Um, schematic is there to be used and leveraged. So I think bigger picture for me, look, right, it's still pretty much the same. I'd like to see a little move up. I'd love to see this kind of rally happen based on the halving. And then I think once we've had that, a lot of retail will be, I'm long for the long run. And I therefore see the drop being not really ruthless, not really aggressive. I think the drop will be slow and boring, if I'm honest. I think the bigger picture is definitely a slower, more sophisticated type of move. All right. So anyway, that's where I think we are. I'm going to leave it like that for today. Thanks for watching, guys, and I will see you on the next stream.